Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth chart analysis. Today is November 6th, 2025, and we are diving into one of the most talked about stocks right now, Amazon, ticker symbol Amazon. There has been a whirlwind of incredibly bullish news surrounding the company lately, and the chart is reflecting that excitement. First, let's talk about the major catalysts driving this move. Just about a week ago, at the end of October, Amazon reported blockbuster Q3 earnings that absolutely crushed Wall Street expectations. The report showed incredible strength across the board, with revenue up 13% year-over-year and, most importantly, Amazon Web Services growth jumping by 20%, its fastest pace since 2022. This AWS reacceleration was exactly what investors were hoping to see, calming fears about a slowdown in cloud spending. This news was compounded by the company's focus on efficiency, having conducted 14,000 layoffs to become a leaner organization. As you can see on this daily chart, the market reaction was explosive, causing a massive gap up in price on October 31st. The stock closed around $222 on October 30th and opened the next day at over $250, a clear signal of overwhelming buying pressure. But the good news didn't stop there. Just a few days ago, on November 3rd, it was announced that AWS inked a monumental $38 billion deal with OpenAI. AWS will be supplying OpenAI with the critical AI computing capacity it needs, reinforcing Amazon's dominant position in both cloud infrastructure and the booming AI sector. This news directly addresses a concern some analysts had about Amazon's AI strategy, proving they are a formidable competitor. Unsurprisingly, this catalyst sent the stock surging again, and we saw a wave of analyst upgrades, with firms like Wedbush and UBS raising their price targets to the $280 range. Now, let's break down what this looks like on the chart from a technical perspective. Looking at the daily chart, we can see a clear downtrend that was in place from mid-September through late October, where the price fell from around $238 down to a low near $213. The earnings report completely reversed this trend with what we call a breakaway gap. This area between the pre-gap high of about $227 and the post-gap low around $244 is now a massive support zone. As long as the price remains above this gap, the outlook is extremely bullish. After the OpenAI news, the price pushed to a new recent high of $258.60 on November 3rd. Since then, we've seen some consolidation, which is healthy after such a powerful move. The stock is currently hovering right around the key psychological level of $250. Let's switch over to the 1-hour chart to get a closer look at this recent price action. Here we can clearly see that huge gap up from the 30th to the 31st of October. Following that, the price established a range before the OpenAI news on November 3rd provided the fuel for the next leg higher. In the last couple of days, the stock has been building a base above the $248 to $250 area. This is constructive price action, suggesting that buyers are absorbing any selling pressure and preparing for another potential move. The low from yesterday at $246.16 is a key intraday support level to watch. Now let's drill down even further to the 15-minute chart from yesterday, November 5th. We can see that the stock experienced some selling pressure in the morning, dipping down to that $246 level. However, buyers stepped in aggressively at that point, and the stock rallied for the remainder of the session, closing strong above the important $250 level. This intraday recovery demonstrates significant buying interest and resilience, which is a very positive short-term sign. So, what's the verdict? Let's go back to the daily chart and discuss the bullish and bearish cases. The bullish case is incredibly strong. You have fundamental tailwinds from stellar earnings, AWS reacceleration, and a landmark AI partnership. Technically, the stock has broken its downtrend with a powerful breakaway gap and is consolidating at higher levels. If bulls can push the price above the recent high of $258.60, the path towards analyst targets in the $270 to $280 range looks very clear. The bearish case, on the other hand, rests on the fact that the stock has moved up very far, very fast. It's potentially overbought in the short term and could be due for a pullback. The main danger for bulls would be a drop back into that earnings gap. A break below $244 would be a warning sign, and a full gap fill with a close below $227 would negate the bullish thesis entirely and could lead to a retest of the October lows. To recap, let's outline the most important price levels you need to be watching. Your key resistance is the recent high at $258.60. A break above this is the primary bullish confirmation. Your pivot level is $250. Staying above this is constructive for the bulls. Your first major support level is at the top of the gap, around $244. And your most critical support, the line in the sand for this bullish trend, is the bottom of the gap around $227. So, what are my predictions? The most likely scenario, which I'd place at about a 65% probability, is that we see continued consolidation followed by a breakout above $258.60 in the coming days and weeks, targeting the $270s. A healthy pullback scenario, at around 25% probability, would see the price test support at $244 before bouncing higher, offering a better entry for those who miss the move. A bearish breakdown below the gap support is the least likely scenario, at about 10%, and would likely require a significant negative market-wide catalyst. Keep an eye on any further details about the OpenAI deal and upcoming economic data. That's my analysis of Amazon. This is not financial advice, it is for educational purposes only. Always conduct your own research before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Amazon in the comments below. Thanks for watching, and I'll see you in the next one.